Hi, Reuben. Thanks so much for joining the ScaleUp Africa podcast. It's really good to see you.
Amma, delighted to be here.
Great. So tell us, the first question we normally ask is tell us about your journey and how you got to this point. So your career and what sparked your interest in this space of philanthropy and impact investing.
Yeah, well, it started when I was 17, and my parents probably foolishly let me go backpacking across Mozambique and Zimbabwe. And I had an amazing time, a couple of months traveling there. But particularly in Mozambique, just saw how devastated the country had been by civil war. And I came back going, I need to do something about this. I need to roll up my sleeves and uh, do something which can really help transform lives. And I particularly focus in the area of healthcare. So the first part of my career was as a public health specialist. I worked across Darfur, Liberia, Congo during the humanitarian crises there.
Mm.
Um, but over a number of years, really began to ask the question, how do we address the root causes of poverty, of conflict? And the reality is that young men in particular pick up weapons and go to war because they have no opportunity. There's no way to feed their families. And so they're easily manipulated to essentially destroy because there's no other way to survive. And I became really intrigued. What role does business and investment play in this space? And at least at the time, there weren't many people talking about business in the international development world. And I remember I sat with a philanthropist who was supporting some of the work that we were doing. And as I spoke with this philanthropist, I asked him about his business. And it turned out his supply chain stretched into a number of the countries where we operated. And uh, he was employing thousands of people in these regions. But he never thought about actually how did he integrate impact into his business model. And as we talked, I said, well, what would it look like rather than you write a check and for me as a nonprofit to develop kind of micro livelihoods? How about I help you do your business in a better, sustainable, more impactful way in these markets? And so that really brought me into the world of business. I ended up advising a number of multinationals who are entering African markets. It took me across to the World Economic Forum. They're, of course, best known for the Davos conference, but the rest of the year, they're essentially an economic policy think tank. And I worked with African governments, with multinationals, really trying to align incentives and harmonize policy towards inclusive economic growth. Um, but I'm not cut out to be a policy person. I'm not patient enough to be a policy person. And the people who
Yeah.
are really inspiring me were the young entrepreneurs who I was meeting, who were building incredible solutions in the area of education, healthcare, finance. And they were often coming to me because they thought that I had access to capital, that I knew people who could invest in them. But as I spoke to these amazing young men and women, I realized that they needed more than capital. They needed really support to enable them to succeed. It was access to markets, it was access to talent, it was favorable policies from the government, it was infrastructure. Um, and so I began to think, how do we develop a support system which would really get these businesses investment ready and then enable them to secure investment and scale? And so that grew into a group called the Transformational Business Network. We invest across East and Southern Africa. We then opened an office in Singapore and invested across Southeast Asia. And we really saw the fruit, the results from that work. And then most recently, so the last 8 years, I began to ask, how do we go and really scale what we were doing? We were deploying kind of tens of millions, but the reality is um, SMEs and emerging markets need hundreds of billions.
Mm.
And how do we use that impact first capital to be catalytic and to unlock wider capital markets? So that's been one strand of my work over the last 8 years. The other strand is how do we help people who have a faith, who call themselves Christians, to realize that their faith can be integrated in their Monday to Friday. So it's not something abstract which exists only in church on a Sunday, but actually how you run your business, how you deploy your capital, how you treat your employees, how you impact the environment around you. We should be thoughtful about that, and we should
Mm.
bring our values to bear on that. So these two strands of my work have gone hand in hand. The advisory work, and that's really working with family offices and foundations to enable them to use their capital really catalytically. And the essentially it's a media company to tell news stories and to help people engage with their faith and think about what that means for their business and investment.
Fantastic. Thank you so much. So tell us a little bit more about what you're seeing in the faith-based investing space, because we see a lot of course, churches everywhere. Africa is a predominantly, very active, community of churches and Christian organizations that, have been, we all know the controversies around how, they could do so much better in terms of the following that they have and how they can really make an impact in economic terms and business terms. So tell us what you're seeing through your media company, the stories, some of the stories that you've unearthed. I mean, I know several in the faith-based investment community that are doing amazing things with venture capital, with different types of funds that are really proving the case for the fact that, impact is not just about charity. I mean, I think there's a bit of a misconceptions about what impact investing actually is. But the fact that, there is a massive business case for doing business really, really well by just addressing societal needs with the business principles. So tell us about what you're most excited about in terms of maybe one or two stories that you've seen that can demonstrate how faith-based investing is really taking off.
Absolutely. So I think there's this huge opportunity which people don't realize. And so the model which unfortunately we exported from Europe and North America is that business investment makes as much money as it can. And then insofar as they understand generosity,
Mm.
they give a little bit to the people who do good,
Right.
the nonprofits, the churches, and hope that they can somehow alleviate the major problems that are facing the world.
Yes, yes,
But that capital is
and also it's like, sometimes, I mean, generally you see a lot of the cases where you're doing harm in the trillions and then you're doing good in the millions, and it doesn't quite add
exactly.
up, right? So that is really the critique that we're sort of talking about here. Go ahead.
Exactly. So we're trying to break down this divide between these two worlds and say,
Mm,
actually, no, you can integrate your faith, your values, and invest in things which are sustainable and scalable and economically empowering. And of course, the biggest global network in the world, if you think about it in pure business terms, distribution access is the church. It has reach into almost every community
mm,
in the world,
hmm.
and it has an ability to create communities of trust. And actually, business succeeds or fails at the speed of trust. You'll be very familiar in West Africa. Some of the most successful business people in Liberia were the Lebanese,
Hmm.
um, because they developed deep trust networks that even during the civil war in Liberia, they were running businesses, they were setting up breweries, and they were supplying the needs of the country. But they could take that risk and work in that deeply challenging environment because they had this network of relationships from Liberia to Lebanon to enable capital and trade to flow.
Mm.
And I think as people of other faiths, as Christians, we should be able to replicate that and actually have economic models of flourishing. And a little bit of theology, we won't go deep into it, but I think there's a huge attraction for young people. I think they're often sold all sorts of dreams
Right.
with kind of some dangerous consequences. In many churches, say kind of do this and you'll get rich
Yes, the
quick.
prosperity, message. Yeah, yeah,
Exactly. So I think that's feeding a real need and a real hunger and a hope that people have of like, I want to see a way out of
yeah.
my situation. I
Poverty
want
in
to
my
be able to
situation.
improve.
Mm.
But we can't do it in an exploitative way.
Right.
And that's where I think the real danger lies. We need to do it in a way that not just benefits the individual, but actually benefits the wider society, is not trying to extract, but
Mm.
it's trying to give back and create. And so just give you the scale of that. Some friends of ours at Bright Lights did some research last year. They found that in the public markets, there's about $130 billion of capital that's being deployed in faith-based strategies. And they estimate in the private markets, it's harder to quantify, but they estimate it's probably in the region of 60 to 80 billion that's being deployed in the private markets. So there's a lot of capital which is beginning to flow and look for these type of opportunities. Now, that's worldwide. In
Right.
terms of what's flowing towards Africa, it's still a much smaller quantum, but there isn't a real interest. There's some real pioneering investors saying, actually, we have a role to play in this space. We need to partner with local entrepreneurs, local fund managers, because of course there's incredible capability on the continent. So in terms of local fund managers, you'll be familiar with people like um,
Adesua and
Addis,
yeah,
yes,
of course, Rockstar, and
Third
then
Way Capital, the
yeah,
great
Kola,
Ghanaian investment.
Aina. Yes, exactly.
Exactly.
Yes, yeah,
Sango Capital, which is in private equity.
yeah,
So it's incredible pioneers which are delivering both good financial returns and delivering impact through their businesses. A few of my favorite examples. Um, there is a business in Kenya called Kintegra. They found there's a plant that grows there called pyrethrum. And this plant, sorry, pyrethrum is the drug that comes from the plant. It's an organic insecticide.
mm,
Kenya was one of the world leaders in producing this for many decades until the government got involved and had a monopoly over the trade and managed to destroy the industry for a period of 30 years.
right,
But they denationalized it, opened it up to the private sector. Contegra has come in, working with thousands of smallholder farmers across Kenya, producing this plant, processing it, creating this really valuable extract, which they then sell to global pharmaceutical companies. And that's creating thousands of jobs across smallholder farmers with their employees, really good quality jobs, and really seeing upskilling in that space.
yeah,
Another great example from Ghana is a company called Ethical Apparel, and they just recognized that the textile industry could move from Southeast Asia, where it's been predominant, to West Africa. Of course, much shorter supply chains between West Africa and the US and European markets.
right,
But what they wanted to ensure was it wasn't business as usual in terms of exploitative sweatshops. They want to build high quality factories offering great quality jobs, really empowering and skilling their employees. And they've been able to grow and scale that business. So it's really interesting. Those are kind of much more traditional manufacturing businesses. And then, of course, in the technology space, new innovative technologies which are being pioneered in Africa, from telemedicine. We have a company in Kenya which is using telehealth. So surgeons in Kenya can be partnered with surgeons in other hospitals around the world, and where they can learn from and operate together on a patient. And
mm,
so you're really upskilling the Kenyan surgeons who may not have had the level of training that they need, but now they're actually getting their capacity built.
mm,
Another great example in the healthcare sector in Nigeria was where the ambulance service is essentially privatized. So if you're in a car accident, you're lying on the side of the road, someone's trying to call an ambulance, but where do you go? There's no 999.
yeah,
And so you're dialing dozens of different ambulances. Who knows when you're going to get
yeah,
through it? So they created an app platform where you just press emergency. It automatically dials all of the nearest providers. The first one nearby responds. And then it has an integrated payment system integrated with your insurance, which can then follow on and pay for that. So interesting, innovative technologies
yeah.
addressing
Really
fundamental
basic
needs.
fundamental needs, yeah, at a mass scale. So, what's your final word on your catalytic capital work and how catalytic capital can actually be done at a broader scale and have more people understanding the opportunity to be bold and take risk and really enable the private sector and private capital to flow in? Your final words on that.
Absolutely. So catalytic capital is too small on its own to make a really significant difference unless it is able to leverage and bring in the wider capital markets into this space. And so by designing the capital stack in the right way, it's able to go first, it's able to de-risk and enable larger flows of institutional capital to enter African markets.
Break it down for
So
folks, because a lot of people use the words and the phrase catalytic capital, and there's a lot of pushback around like what that actually means and examples of how that's worked. We've certainly done quite a bit with foundations to really provide that first loss layer and then invite crowd in more capital. But just break it down for maybe folks who are maybe in philanthropy that don't really understand the space, but maybe make the case for why that approach is so important for us, especially post ODA at the moment.
absolutely. So I'll just root it in two examples.
Mm,
So one is a real estate fund which develops charities which are property rich, but they're cash poor. So example, a charity, it's in Accra city centre, it's providing incredible services to youth,
mm,
but it constantly has to go out and fundraise to continue to provide those services. It has property, but it's completely underutilized. So if you imagine all of these tall 18-story buildings around it, and it's a two-story charity building in the
yeah,
midst of that oasis. What you can do is redevelop that property so that you now have a
more square
skyscraper
footage.
building. You're
Yeah,
renting out
those
those other
units.
floors. They're bringing in rental income, which can now pay for your charitable services. But the key is in structuring the capital stack. And
Right.
so the catalytic investors, what they're doing is they're helping get the design, the planning permission, doing the feasibility studies to where that site is now fully de-risked and investment ready.
Mm,
And you can then take that opportunity to a commercial bank
mm.
and say, this is a de-risked property investment. Will you give us a mortgage or an equity investment into this so we can do the full development? And so a 1 million catalytic capital can unlock 20 million of
Exactly.
commercial capital to do that project and enable a win-win for all the parties involved.
Yeah, yeah. I think
Um,
these
one
stories we need
other
to actually break them down more because this is such a really simple, basic business structure. But of course, the impact is very clear to see from the story that you just told. So, yeah, I think we all need to do a better job of actually highlighting and illustrating what can be done with this kind of approach.
Exactly.
Mm,
One other example, private credit is how businesses across the US and Europe scale. Private credit is very limited and difficult to access in the African markets.
yeah,
There's massive pools of institutional capital, pension funds, and insurance company capital, which is under allocated to emerging markets. So emerging markets make up 35% of global GDP, but typically, asset manager has 2 or 3% allocated to emerging markets. So that means they have a concentration risk of too much capital in developed markets, and they need to diversify, particularly given that the growth curve is mostly happening in emerging markets.
yeah, and
The
also
reason
also
they
also important to note that domestic institutional investors also need to diversify, right? So that pension funds in Africa are generally around 1 or 2% diversified, and most of them go to government bonds. So again, the broader story about diversification is really important for pension funds and insurance companies and other institutional investors to really understand. And these are the models that we need to be talking about blending different types of capital to unlock that.
absolutely,
Hmm.
absolutely. And the reason they don't deploy capital is they have a risk perception that private credit doesn't meet their risk return criteria.
Right,
And now, most of the time, that is a misperception. And what we need to do is build a track record and show actually that private credit is highly investable and has a lower risk profile than perceived. But the way we're able to overcome that is by utilizing first philanthropic capital, which takes a first loss position for higher returns. But that capital enables us to unlock an insurance wrapper, which covers the principal. And so says actually to an institutional investor, there won't be a downside because the catalytic capital and the insurance stacked on top of that means that if there is a problem, they will take the hit first
right,
before you as an institutional investor. Now, the institutional investor then pays a premium for that insurance wrap so that you can pay those other investors. But over time, if you run that out over a 5, 10 year period, you'll be able to demonstrate actually there was far less defaults than anticipated. And in fact, you don't need the insurance wrap. And so you'll build confidence in the market that actually
right.
we can deploy capital at scale and get the returns and the risk profile that we need. And so at the moment, we're building that out through a group called Impactable. and bringing that to market and hopefully seeing that scale and seeing billions of capital flow across Africa.
Really excited to watch. I think we were talking earlier about this and how we're also trying to figure out the insurance bit. But the insurance wrapper is, I think, a critical part to unlock and get, just basically to give confidence to those who are still on the fence in terms of institutional allocations to this asset class. Reuben, thank you so much. I really look forward to exploring more about what you're working on with Impactable, and just thank you so much for making time.
Wonderful to be with you, Emma. Thank you.
Take care.